Hey guys, hope you're doing well. I figure it's time for another crypto market cycle chart. I got to think of a good name for these, by the way. So if you have good name ideas, let me know. I know the YouTube game has got a lot more competitive since I originally started making videos on crypto like 10 years ago. So I got to get my game up on keywords and probably thumbnails and stuff too. I got to start doing that. But alas, I want to get you guys the information. I think that's what's super valuable. So, in my 10 plus years being in crypto, I learned something very valuable, which is one of the most important parts of being in crypto is paying attention to the market cycles. Crypto has massive ups, you guys, and massive downs, and it is extremely critical to really catch the waves, and I can't emphasize this point enough. This is why if I'm doing videos on anything for you guys regularly, this is what I want to do videos for you guys on. And this is also what I feel like is some of the most important things to watch in crypto on a macro level, just so you know when you can get in cheap and when you get out when it's high. It's super important. So with that being said, let's dive into this, guys. I make these charts every week or two approximately. And, something, again, that I keep my pulse on, and I know you guys love these when I share them with you, so I want to do it. So let's jump into this. So first thing, again, we're looking at the total market cap here. The market cap is currently a little over $1 trillion for all cryptos, with the trend giving a value of 1.7 trillion. So we're below trend here. You can see the white lines where we're at. The trend is where it's at. The orange line, again, represents where the trend was in that point in history. So this is something interesting to observe, is that this trend line is seeming to have been pretty accurate over the past few years. As we can expect, it's stabilizing over time. Overall growth rate of crypto is 59% per year. Of course, this is gradually decreasing. And this is April 12th when it's generated, April 12th, 2023. So the next chart I have here is the percent deviation. Again, inspired by the Tralalo charts, who used to do this on Bitcoin Talk like 10 years ago. So kind of ode to him, just kind of cool to see what percent undervalued or overvalued. This is my own creation, which is, again, the time deviation. And again, you can see here, this is a chart of how many months, undervalued or below valued. And the reason why this is interesting is because the growth rate slows over time. So it's really interesting to me to figure out how much time in a time expression, how much is undervalued or overvalued. And you guys can see that crypto right now is about as undervalued as ever. Holy moly. All right, so let's move on. Here's altcoins. I'm having a little bit of issues with these graphs. Sometimes it happens with the APIs. But anyway, you can see regardless of which, once again, altcoins are actually more undervalued than ever in history. Holy crap. Yep. And does that always last? No, it doesn't. And we don't know what's going to happen. So, look at this in 2017. When things are really undervalued, this was an insane time, you guys, 2017. I'm actually going to show you guys something on the Ethereum chart in a minute because I was just reflecting on that, man. And I want to remind you guys of the power of crypto. I know we're in a bear market, but don't forget it. We'll come back to that in a second. Here's Ethereum. This is, again, I'll go over these as I remember. A price here for Ethereum is 1,888. It's a lucky number. The fair value of now over 6,000. It ticked over 6,000 now. So this is where the trend line is at. And again, look at the orange trend line here, and you see it is getting better. It's stabilizing more, but still, it was over predicting where Ethereum was, and for altcoins too. Let me see. Go to the altcoin chart here. Where's the? I might be missing that one on this one. Okay, that's okay. Anyway. But you can see, the charts are stabilizing over time. So Ethereum was a little bit high overestimated, but as you can see with the other charts, you can check out Bitcoins here. Look how much Bitcoins has stabilized, over the past few years. So these are a pretty good predictor, or expression of if we're undervalued or overvalued. So let's go back to Ethereum here. Look how undervalued Ethereum is. Very undervalued here on the on the log chart, price deviation, and here on the months deviation. This is look at this, you guys. Ethereum was more undervalued than ever in history at the beginning of 2023 and kind of late 2022. This was after the whole FTX issue was around 1,200 in price, 1,100, 1,200 in price. And we've done pretty well. But Ethereum's coming out pretty nice, coming out pretty nicely out of it. Again, look here, the growth rate. This is saying the growth rate of Ethereum, 87% per year, guys. Again, stocks grow at what, an average of 7% a year. That's why I say crypto is the 10-year retirement plan, rather than stocks, which are the 40-year retirement plan. Powerful stuff. You guys just got to be in the game. And then let's look at Bitcoin. Bitcoin is interesting. You see Bitcoin is actually kind of leading the way out of all this. Look, the fair value price of Bitcoin, or the price of Bitcoin is 30,200, which is awesome. We broke that 30,000 level. That's huge. Fair value of 38,000, growth rate of 40% per year. So let's look at the look at the time deviation here. Bitcoin is still undervalued. It's about 10 months undervalued, and Bitcoin also hit an extreme undervaluation as well. But you see what happens when you hit an extreme undervaluation. You can have rapid moves out of that. Let's go back to Ethereum on that because I want to show you guys something. So we're going to look back. Actually, Ethereum wasn't even very undervalued here, but let's also see where the price or where the chart was then. Of course, it varies. Back in 2017, ironically, the expectation was about the same as where it's at. But I want to show you guys what happened here. It's really funny. I had an interview with a Bitcoin maximalist here. He took down the interview, which sucks. I wish I kept a recording of it because it was hilarious. He was just an Ethereum hater. He was a Bitcoin maximalist, and he was just hating on Ethereum. He's like, oh, Ethereum's going to die, this and that. And I was just trying to be really nice to him in the call. Ethereum was $7 at the time. This is a log chart of the price. This was in December 2016. Hilarious what happened in the months after. I'm sorry, it's just a really funny thing about it. I wish I could find that because it would just be so hilarious to listen to. Anyway, here we are. So this was around that time. Look at this. End of 2016. Ethereum had a nice run up in 2017. In 2016, went from $1 to around $10, $15 and hung around there for about a year. And then, kind of nothing happened. And then here comes 2017. 2017 started off with a bang. Look at this, you guys, pretty much $10. Again, let's look at this. It was $10 in January, even February. Okay, let me get this over here. About February, it was $11, okay? And then look at this. By June, you're looking at the $200-$300 range. That's insane. So from February to June, you guys, that's not very long. Imagine like right now we're in spring. Imagine if February things started taking off and a couple months later you're at $400. That's a 30x increase in price in 3-4 months. That's nuts. That's the potential of crypto. That's what you have to remember. So don't forget that, you guys. I know we're in a bear market. Don't forget that. Obviously, these sorts of moves don't happen often. And they also, it's unlikely to have this much of a move as the price kind of grows. But it was a crazy time. And then what's really funny reflecting on that time is, so then things kind of stabilized, and it would have been justified for things to come down because that's a huge increase, but it didn't. Then we had another massive surge at the end of 2017. That was a crazy time, man. 2017 was really a remarkable year for crypto. Anyway, so here we are now. Let's look at this now, guys. I want you guys to see what I'm seeing, which is, again, we go through the cycles, right? As I was talking about, you got to pay attention to the cycles that crypto goes through. So look at these waves. Look at this log chart here. And what we see here, what I see, which is, it's not guaranteed because trends can reverse, of course. But look, we obviously topped out in 2021. And then we had this year where things have basically stabilized. This was, it was a rough time here, you guys, last summer, when, ETH just kind of got hammered. And, we didn't know necessarily how low it was going to go. It hadn't stabilized. But here we were around 1,200. And then it kind of went up and down a little bit around there. Of course, in December after the FTX thing, things looked like they were recovering, and the FTX thing hammered it. And then, it was around 1,200. But then if you guys look closely here, I can't zoom in, but you guys see this little uptrend here picking up. That is a promising little uptrend. Bitcoin actually, again, has had much stronger performance, and Bitcoin a lot of time leads the way. So that is very positive to see. The linear chart shows it great. Look at this. Look at this movement. Insane. And again, that's what happens when you have, where are you? That's when you have sort of, again, extreme undervaluations. It's easy to have moves like that. So Look at this movement on BTC. That is very bullish. That is a very bullish surge. On a log chart, also looking very strong, you know. It's not necessarily that these trends always continue. They can reverse, but given how undervalued we are, I would be skeptical. Here's another time to look at. 2019, for those of you guys remember, there was a surge in the middle of 2019. We had come off the bear market of 2018. 2018 was a rough year. Crypto was going down. And look, those of you guys who are around remember this. In late 2018, Bitcoin had stabilized around 6,000. It was just like hitting this trend line over and over. And then it broke down hard and came down to about 3,000. Yeah, rough little time there coming off that. It was the end of 2018, I remember. It's right around my birthday. Anyway, so I think it stabilized around that. It came down and stabilized, and then 2019 had a nice little recovery, nice little respite that was needed, and then kind of fun to reflect back on here. Things were kind of stabilizing this level, and then boom, there was the COVID drop. But coming out of COVID, holy crap, look at that. That's what happened. So let's look at the. I want to look at one thing that's interesting is a difference, because you could have an uptrend like we had here in 2019, but it can also reverse. But if you look here for that surge we had in 2019, Bitcoin, for instance, was undervalued, but not nearly as undervalued now. I'd say that lends strength to where we are today. Let's look at that also on the total market cap chart here back in 2019. Again, things were undervalued, but not nearly as undervalued as are. And the one thing I should say, guys, is I feel things should stabilize over time. So being kind of more overextended over time is, I imagine it like a spring. It can spring back. So these moves we're seeing here, I'd say are very strong. Now, of course, you guys, there's macro environment things going on. I'm expecting a major market crash. I don't know when. I think they're kind of holding it back, waiting for whatever they're doing. But, you know, the yield curve is more inverted than ever for those of you guys who watch that sort of stuff. Maybe I'll do a video on that sometime if you guys are interested. But the yield curve is massively inverted, which is a big recession indicator. And, we see it in the economy. Right now, the whole situation with banks aren't paying, a good rate on their on money held there. And if they do, bank profitability is going to crash. So like either way, they're kind of screwed. Either they're bleeding money because they're not paying out good rates of return to their depositors, or they're going to pay out good rates of return to their depositors but have bad profitability, which would be bad for stock price. So I feel like banks are kind of stuck between a rock and a hard place. Yeah, I think there's going to be a correction in the market, like a major one. I don't know when. But the whole point is, until then, look at what's going on. Look at what's going on. What's going on is people are pulling money out of banks and putting it into crypto. I saw a chart of how much money leaving the banks. I'd have to try to find it, but basically for all 2020, money has just been leaving the banks. Of course, Bitcoin was going down that time, but now it seems like that money is flowing into crypto, and we also see that in gold and silver. So basically what I'm saying is, until this big crash or whatever happens, crypto is well situated. And then when the crash happens, it's going to affect everything, but coming out of the crash, I think crypto is extremely well positioned. Again, you guys, these undervaluations, and this can go from undervaluation and just pick up momentum super fast and go to overvaluation territory, and then everyone cares, right? Everyone loves crypto. The tourists all come back, and that's the time to take profit. That's the time to take profit. That's the time to take, not financial advice, but a percentage of your portfolio. It's something I've really learned over the years. You dollar cost average in, you dollar cost average out. When a good rule of thumb that I heard is like every time something doubles, take 10% out. And that gives you ammo that when things go back in the gutter, which is inevitable, things go through cycles, then you have ammo to buy in. We have to really pay attention to this stuff, guys. That's why I do these videos. Because it's so critical. You could do everything else right, but if you're not paying attention to these cycles, you're going along with the waves. You're getting hit by the waves, crashed by the waves. It's happened to me, and more times than I wish it had. But it's this is me. The reason again I'm doing this is it's time to really ingrain these lessons hard. And again, we all need to be paying attention to these market cycles. There's too many people who don't, and I think it's critical. So anyway, good times, guys. Give me your feedback in the comments. Tell me what you guys like on these videos, more what you'd like to see. Just give me some feedback, and Hope you guys like this stuff. And yeah, I'll catch you guys on the next one.